Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. Here is situation, technical picture at least, more transparent compared to the Forex market. We have clear evident pattern that we actually discovered 2 weeks ago, but finally this week on the retail broker chart, whatever you use, probably you will see it. Because in my chart here on the FX choice, on the weekly chart, this week rubber has appeared, although as we mentioned last week, it has been in place already right there. So this is already the rubber based on the futures. And since then, market is moving accurately, confirming the power of this pattern. It's dropping down, it's forming, you can see tail closing with a big sell-off. So by the analysis that we have prepared today in the weekly report, we see that it is not occasionally. So market really has some fundamental background that suggests it's possible retesting of these lows. That's actually the target of this pattern. So we are aiming on considering taking 1680 area, so retesting, maybe even moving slightly lower, because in today's analysis that we have prepared, we come to some interesting conclusions on the gold market. So you could read the report, and in 2 words speaking, that current situation and the amount of the sources that Fed and United States government, United States treasuries have led these authorities to stay on the surface, control the market, and even following with the strategy of the rate hike for 6-9 months, probably, maybe year. So because they have approximately $2.5 trillion in reserves, and that led them to stay on the surface, postpone the new debt issues, and well, use this liquidity for market support. That in turn will make some pressure on the gold market. It's just because Fed could feel relatively free for another 1-2 steps in a rate, which will be some pressure on the gold. But at the same time, overall statistics and situation in the economy is coming from the bad to worse. And from that standpoint, despite we maybe can't count on a real final reversal on the gold within the nearest 6 months, we also can't talk about the new collapse on the gold market. That should not happen. It's just because of the factors that we have discussed in the report today. And more prominent is to suggest that on the gold market, we probably will see some wide consolidation around the current levels. Maybe some minor spike down might happen to the area that we have talked around 1650, 1680. That will be very short term, and we do not expect this will be some major breakout. Mostly market should be stable above in around 1660, 1680 area, and that probably should become the background for the further reversal later. In close to the second half of 2023, when the final reserves that Fed currently have should expired gradually or is housing. So that's just a common view on the fundamental background that we have. In the shorter term, trading on the common week, as I said, the major pattern is the bearish grabber that we have on the daily chart. Market is coming with it, and you can see that based on the local ABCD pattern, we have the COP precisely the previous lows. Despite it stands slightly below the oversold area, oversold hardly will become the problem. It's just because for the gold market actually deals easy because it is commodity market. They are easy with oversold overbought conditions compared to the financial markets. And this is first moment. Second moment, while market will keep going lower, oversold also will drift lower. So I think that when they will come here, it will be converged to around this area. So I don't see any problems that gold can't reach the target this week. It's around 1685 area. So that's the target that we're aiming on. Obviously, with the background that we have with the grabber on the weekly chart, we're not considering taking any long position on the gold market right now. So we're mostly watching for good points, good levels for entry to the downside. On the 4-hour time frame chart, we also see rising pressure. It's just because take a look how market responds to the confluence. Actually, no response at all. So market is just trying to pass through it, making the press on them, although it still stands around it, so chances on the bounce exist. But the way of this performance tells that stands significant inner downside, inner bearish pressure behind this downward action. Because normally, this meeting the strong support after the significant upward action, the pullback that we suggest initially is maybe the head and shoulders, or as we could call it, as a cup and a handle. It's well, normal case, so it's usually happens. But when you see that something's going different and market's just pressing for confidence without any pullback, it just tell you that sentiment stands strongly bearish, and probably we should search for nearer standing pullback levels where market could show the bounce. Still, it's inside the confluence. Or if no bounce will happen, the next level where it could happen is 1730. So in this case, you could act differently. You could either wait for a next strong support and then wait for a bounce, or try and jump in on some minor pullback on intraday charts. Trading on the hourly chart, on the 15-minute chart, trying to catch the minor retracement and taking the position in a direction of the further drop. So on the hourly chart, based on all this information, and because we do not have any clear pattern here, so any hand and shoulders that we initially suggested that might be formed there, as you can see, has not been formed based on the reasons that we just talked about. But at the same time, take a look, market forms relatively accurately the ABCD pullbacks. And since currently we're still around the confluence, if we get lucky and market indeed will form and repeat the same ABCD pattern, because downside swings also mostly stands the same, very equal to each other. In this case, I think that we could consider 1760 area as a potential level where to take the short position. The pullback to the 1767s might be really just a gift, because this is confluence, strong resistance, and it's very attractive and better price for entry. But I have some doubts that we will get so deep the pullback right there. So actually, in the beginning of the week, we just need to see the bounce, the speed of the bounce. So if we'll get something of this sort, thrusting acceleration, something like this, it tells us that, well, suddenly chances on a real pullback here is appearing, and we still could watch for 1780 probably. But we need really thrusting strong action here, which, as I said, well, hardly possible in the current scenario. More probable is that we will get something of that sort. In this case, we suggest that 1760 might be most probable level where market will reach, although minor chance exists that might reach the confluence, but I wouldn't count on too much on this level. So that's overall logic that we have. That being said, bearish positions. If we will get the pullback, all the better. That's we will get a chance to take the position at the better level. And as a target, we use the previous lows around 1680 daily levels.